All right, let's dive into something truly wild today.
What do we got?
Imagine waking up to news that a brand new digital asset, just launched days ago,
Okay.
has already added billions with a B in paper value to a really prominent family's fortune, almost overnight.
Wow. Okay, billions. Paper value, you said.
Yeah, paper value. And this isn't hypothetical. It's the story of the World LFI token from World Liberty Financial.
Ah, WLFI. Been seeing some chatter about that.
Exactly. This news broke, reportedly, Tuesday, September 2nd, 2025. Trading only kicked off the Monday right before.
That's like lightning fast.
Totally. So today, our mission is really to cut through the hype. Look at the sources, understand the mechanics behind this huge financial surge, who the key players are,
Right.
and maybe touch on the bigger questions it's sparking for all of us about finance, power, digital assets, that whole mix.
Yeah, it's a potent combination. And what's immediately striking here is World Liberty Financial itself.
How so?
Well, it's a platform in the decentralized finance space, DeFi. Right.
And it's suddenly become this huge focal point. You've got these, let's say, traditional finance-adjacent figures making a very public splash into crypto, which, as you said, leads to massive gains, but also intense scrutiny right away.
So where are we getting the details from?
We're looking mainly at a recent report from The Guardian. It lays out the trading debut pretty clearly,
Okay.
and the implications give us a good snapshot of that initial market blast and the story behind it.
And what a blast it was. The launch had all the ceremony, didn't it?
Seemed like it.
Donald Trump Jr., reportedly at the NASDAQ opening bell. That was August 13th, 2025.
Right, kind of a symbolic gesture for this new venture.
Exactly. And then the numbers started flying. Tokens go on sale Monday. And within hours, they add, get this, a $5 billion in paper value to Donald Trump's family fortune.
$5 billion. It's just a staggering number, even on paper.
Right. But what does that kind of explosion, especially in paper value, tell us, particularly when the price itself was, well, a bit volatile? That's a really critical point. And paper value is key for you, the listener, to grasp.
Explain that a bit more.
It's a valuation, right, based on the current market price of assets someone holds, but it's potential wealth.
Not cash in hand.
Exactly. Highly subject to market swings. And that immediate surge then drop. You said it debuted above 30 cents.
Yeah, then fell to $1.20 on day one.
Classic. That and the high trading volume. That's textbook speculative asset behavior.
Driven by...
A lot of initial buzz, probably FOMO, fear of missing out.
FOMO. Makes sense.
And the sheer volume, CoinMarketCap reported roughly $1 billion worth traded in the first hour.
$1 billion in an hour, even with the price dip.
Yeah. It shows huge liquidity, massive investor interest, and likely heavily influenced by that public figure connection.
So the brand is driving the frenzy more than the tech, at least initially.
It really suggests that, yeah, in those early hours, the name recognition seems paramount.
And that excitement, despite the price dip, pushed the total market cap.
Just under $7 billion.
Yeah.
That's the total value of all the WLFI tokens out there.
$7 billion, which put it where in the crypto rankings?
Made it the 31st largest crypto token, according to CoinGecko data. So pretty significant, pretty fast.
And not on obscure platforms either.
No. Major exchanges. Binance, OKX, Bybit. Readily available.
But this didn't just appear out of nowhere last week, did it? There's a backstory to how these tokens even became tradable.
Absolutely right. The whole venture actually launched back in 2024.
Last year.
Yeah, but crucially, the tokens weren't tradable back then.
So what were they for?
They were more like governance tokens. Gave holders voting rights on changes to the business inside the World Liberty Financial system.
Okay. Like shares giving voting rights.
Sort of, yeah. It wasn't until investors voted, that was in July 2025, to make them tradable.
That this public debut could even happen.
Exactly. That shift to tradability is the key pivot point.
Why is that so significant?
Well, it lets the open market set the price right. It enables pure speculation, generates trading fees for exchanges, which they love.
Of course.
And critically, it attracts a much wider pool of crypto investors, people looking to actively buy and sell, not just hold for voting.
So it transforms from an internal tool to a full-blown speculative asset.
Precisely.
That makes sense. Okay, so what really fueled this explosion of interest, especially for the early people?
Well, the sources really point to the direct connection to Donald Trump.
The name recognition again?
Yeah, and the expectation that his backing would make the tokens grow in value.
He's listed how? Officially.
As a co-founder emeritus on their website. pretty clear link.
Emeritus. Interesting title. But there's a catch for him in the team, isn't there, regarding selling?
That's right, a key restriction. It's actually pretty common in token launches.
To prevent dumping?
Basically, yeah, to stop immediate sell-offs that could crash the price. So Donald Trump, his sons, other team members, they're reportedly barred by World Liberty from selling their own WLFI tokens, though the exact amount they hold isn't specified.
So they have to hold on.
Typically, yes.
Yeah.
It's meant to signal long-term belief in the project, prevent founders from just cashing out immediately.
But what does that restriction actually highlight here?
It really throws a spotlight on the sheer power of personal branding in crypto.
How so?
In this market, a famous, powerful name can almost act like a stamp of legitimacy or a perceived guarantee.
In a space that often lacks trust.
Exactly. It's often anonymous. Traditional oversight is still playing catch-up. So people latch on to a known brand. It crowdsources trust.
Sometimes overriding actual project fundamentals.
It can, yeah. And that seems key to understanding the explosive impact here.
So his name is like intangible collateral.
That's a good way to put it. In a market looking for something solid to hold on to.
And even with those selling restrictions on him, the family's already seen significant financial benefit, right? Before this big trading debut.
Oh, yeah. Reuters did some calculations based on company terms and disclosures. They figured the Trump family had already made around $500 million from the project since its initial launch in 2024.
$500 million, before it even hit the public exchanges like this.
Correct. And now, with this latest surge, the Wall Street Journal reported that owning roughly a quarter of the tokens added that $5 billion in paper value we talked about.
Wow. It just really underscores the sheer speed and scale of potential wealth creation here.
It really does. And it's worth noting the difference between the founders' restrictions and the early investors.
What's the difference there?
While Trump and the team are barred, those early investors, the ones who got in before public trading,
Yeah.
they can sell up to 20% of their holdings.
Ah, okay. So there is some selling pressure allowed.
Exactly. It creates some liquidity, lets initial backers take some profit, provides a contrast to the locked-up team tokens.
And maybe absorb some of that initial speculative frenzy without a total collapse.
It's likely part of the thinking, yeah.
Yeah.
Allow some profit taking.
Okay, so beyond the market stuff, the money. Predictably, this hasn't landed without controversy.
No, definitely not.
Let's get into the ethical alarms. Who's raising them and why?
Primarily Democratic lawmakers and government ethics experts, they've been pretty vocal.
And their main charge.
They're calling the Trump family's crypto ventures profound conflicts of interest.
That's strong language.
Very. And the White House obviously pushes back. But the core concern for these critics is the timing. These ventures are happening, quote, at the same time as the president reshapes the regulatory framework that governs digital currencies in the U.S.
So the overlap between personal business in crypto and presidential action on crypto regs.
Precisely. That's the nexus that worries them. Creates this perception issue, a potential for undue influence.
Is that where the roadmap for corruption phrase comes from?
Yeah, that's the language some critics have used. They're essentially saying traditional checks and balances, which were designed for older asset types, really struggled to keep pace with digital assets. They're nature fluid, global, often opaque.
Makes oversight harder.
Much harder.
Yeah.
And there are reports Trump used the Oval Office to push crypto-friendly regulations.
Right.
When that action potentially benefits family financial interest in the very same sector, well, that's where the conflict flag goes up.
It's less about proven intent and more about the potential and the optics.
Optics are huge here, yeah. And the potential for influence is what ethics rules are often designed to prevent, even if nothing improper actually occurs.
It sounds like the existing ethical rulebook is just straining to fit this new reality.
That's a very good way to put it. The rulebook wasn't written with DeFi and tokens in mind.
So what's the counter-argument? How does the White House address these serious accusations?
Well, it's crucial, for balance, to present their side fairly.
Of course.
They've repeatedly stated that the president's assets are in a trust.
Managed by
his children. And from their perspective, because of that trust structure, they state, quote, there are no conflicts of interest.
So the argument rests on that separation. Management and ownership being separate from direct political decisions.
That seems to be the core of their defense, yeah, that the trust structure is the firewall.
So for you, the listener, it really comes down to weighing those two perspectives.
Absolutely. Understanding both sides is key to forming your own informed view. It's complex.
It really highlights that tangle of transparency, private business, public influence.
Especially at the highest levels, and especially when new tech forces us to ask if the old definitions of conflict still fit.
Yeah, are the old rules adequate for these new kinds of assets and influence?
That's the multi-billion-dollar question, isn't it?
Okay, so we've covered a lot of ground here. Tracked the rapid rise of WLFI. We saw the dramatic launch, the huge immediate paper value impact on the Trump family fortune.
Right, the $5 billion figure.
The mechanics behind how it even became tradable.
The vote, the shift from governance to speculation.
And then these significant ethical questions being raised, particularly around that blurring line between personal business and public duty.
Yeah.
This whole deep dive really hammers home how fast things move in crypto. The structures and politics.
Yeah, this WLFI story, it's really more than just another crypto headline, isn't it?
Feels like it.
It's like a live case study.
Yeah.
Shows the ongoing struggle to regulate new tech, to manage potential conflicts when public figures are involved.
Especially at the highest levels.
Exactly. It forces us to look hard at whether our traditional ethical frameworks can keep up or if they need rethinking.
So here's a final thought for you, the listener, to chew on.
Okay.
As these digital assets keep weaving deeper into our economy, our politics, how do we as a society actually ensure transparency? Ensure accountability, especially when those lines, the ones between private enterprise and public service, get so incredibly blurred by new technology.
That is the question. And understanding these dynamics, these tensions, it's only going to become more crucial for you in the years